Good afternoon and welcome to the Asian Midday Market Watch, powered by Rajhi Bank Malaysia from their offices in Kuala Lumpur. Kelvin Wong, market strategist at CMC Markets, is our guest today. Kelvin, thanks for coming in this Thursday.
Sure, my pleasure, Brian. So good to see you again, especially in the new setup. So you are now in like a kind of a tech company.
Well, okay, nice of you to say that. It's actually Rajhi Bank's new offices in Kuala Lumpur. So yeah, you're right. It's cool. It's like a tech company, and people are playing pool in the background. So very
Yeah.
exciting stuff, actually. Now, let's take a look, before we get your insights, take a look at how cryptocurrencies are performing and also how regional markets are performing. Now, Bitcoin is at 41,595. It's up 0.59%. Ethereum is at 3,091.95. It's up 0.2%. Now, looking across the regional stock markets, we've got the SGX, which is at 3,350.63. It's up 0.46%. Across to the KLSC, it's at 1,596.63. It's up 0.18%. Shanghai is at 3,098.17. It's down 1.7%. The ASX all ordinaries is at 7,887.1. It's up 0.22%. The Nikkei is at 27,532. It's up 1.13%. The Hang Seng is at 20,055. 555. It's a down 1.8%. And rounding up the numbers, we've got the Kospi, which is at 2,729.79. It's up 0.41%. Now, Kelvin, what's your view on how global markets have performed, or regional markets have performed this morning?
So if you look at overall as an overall net performance is rather a mixed bag right now. So definitely we start to see a bit of uncertainty in the global settlement, especially with this ongoing geopolitical risk that is still on the kind of an elevated level due to this ongoing Russia and Ukraine conflict that is still showing no signs of ending in the near term. But I want to highlight to our audience that one factor that's actually driving this ongoing uncertainty in the global equity space, especially in the regional stock market, is actually the sudden move of this yuan weakness. So we're talking about the Chinese yuan that is actually getting weaker since the start of this week against the dollar. So I
Okay,
would
well,
like
let's
to
take a
share.
look at the charts then.
Yeah, I'll share with the audience. So basically, right, this is the chart where we plotted a dollar versus CNH, which is the offshore yuan, that is much more liquid compared to the CNY, the onshore. So if you look right now, since May 2020, the dollar has been weakening against the Chinese yuan. So we're talking about Chinese yuan strength, but we're talking about dollar versus the CNH. So this is a
Mhm.
kind of a broad-based downtrend for the dollar against the Chinese yen. But what happened this week is that he actually staged a bullish breakout above 6.4240 level, and also above this 55-day moving average that has been a 55 period moving average, as taken a weekly chart, has kept this dollar weakness since 2 years ago in July 2020. So that's a significant move that we see today, this week. So it actually now playing a catch up with the bottom of the chart, which is the US 10-year Treasury yield premium over the China 10-year government bond yield. So previously, right, this yield has been this year premium, the US Treasury premium has been creeping up since 1.5 years ago, but that has not been reflected in the US dollar CNH price movement, but it's being reflected now this week. So one of the reason market now has why has PBOC allowed the yuan to actually weaken right now is number one, due to what we start to see at the start of this year. Chinese economic data has been pretty weak. Right now, we start to see further lockdowns and in China, and most recently, we're talking about a very weak retail sales figure that is out on Monday as well. So that actually prompted perhaps PBOC to actually tighten, also as I said, loosen its leash on this yuan strength to allow it to weaken, hopefully to actually boost export growth. Okay, that one aspect. So another aspect of it very quickly is we are now facing another headwind on over here is due to actually the ongoing rampant pace of Japanese yuan depreciation against the dollar that also have
Mhm.
actually a knock-on impact on this Chinese yuan as well. So very quickly, I will share with you this correlation chart. So what I plotted over here is the top chart is the dollar versus the Japanese yen. So you could see this rampant increase in the dollar strength versus the Japanese yen since March this year.
Yeah.
And bottom will be the CNH versus the Japanese yuan. So right now, this CNH versus the Japanese yuan is actually indicating to us that the Chinese yuan is just strengthening against the Japanese yuan to a level of 20.20. So this level is a level that was seen prior to that sudden shock Chinese yuan devaluation in August 2015. So right now, what it means the Chinese is getting a bit uncomfortable with this CNH Japanese yuan level approaching this 2020 level, which it could actually lead to what I call export competitors losing, and potentially we may start to see a risk of another currency war that could actually take shape among the ASEAN exporters as well, such as South Korea and as well as Taiwanese, the Taiwan dollar. So what's interesting over here is if the Chinese yuan could actually weaken further at this juncture, it could actually to be a bit of deja vu that we see in August, September 2015, and global equity starts to reboot as well. During that point in time, we actually lose negative 15% within a period of 3 to 4 weeks. Yeah. So on top of that, we definitely a bit of cautious right now, given the jigsaw puzzle that we are seeing. Things are not so optimistic, where we start to see global cost of funding increases and heightened geopolitical risks.
So, Kelvin, then obviously, what are the implications for the other Asian economies, especially in ASEAN, in terms of their currencies?
Okay, so we got to be very cautious on countries that are relying on their exports to actually drive growth. So two of them I could think of immediately offhand right now will be the Taiwanese dollar, which as per se, the South Korean won as well, and most importantly the Singapore dollar. So Singapore dollar right now it's been pretty much stuck within a big range, but definitely the Singnia I suspect it has a high weightage on the Chinese yuan in the last 3 to 4 years, given Singapore increased connectivity towards China in terms of trade and in terms of capital flows as well.
Now, looking ahead to tomorrow, there's a lot of data out. What are key things that we should be watching out for tomorrow?
Yeah, so as for tomorrow data, right, one important factor I look at is more like a leading economic data for growth. Will be the flash PMI data for both services and
Mhm.
manufacturing out from the developed nations, key developed nations like Japan, US, as well as Eurozone. So do pay close attention to these numbers because given that on the backdrop we start to see higher inflationary numbers I think coming up from this country, and also their central bankers are pretty much hawkish to combat inflation, and most importantly, this heightened or elevated levels of geopolitical risk coming up from Russia and Ukraine. How does it impact businesses' sentiment on these developed nations? So something traders and investors to actually pay attention to.
Now, Kelvin, as always, thank you very much for taking your time to be on the show.
My pleasure, Brian.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on Biztech's Asian Midday Market Watch, powered by Al Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as Al Rajhi Bank's social media platforms. Please like and subscribe to our various platforms. Thank you very much for tuning in.